Morning, Honorable Modise. Where are the other members in this committee?
Morning, Ms. Lankisa and Dota. I'm pretty sure they're still joining, but it's because it's still 9:47. But we'll just follow up to find out where they are.
Oh, okay. All right, Maria. Good morning.
Morning.
Good morning, everybody on the platform.
Morning, Chair.
Morning, Madia. How are you?
Well, and yourself, Chair?
Also good, thank you.
Good morning, Chair.
We're here. Good morning. I hear somebody's radio is playing in the background. Is it good news? Good morning to everybody. It's 10 o'clock
Recording
on the
in progress.
dot. I wish to say good morning to all the honourable members, as well as the ECIC chairperson, Ms. Ndlovu, and her team, as well as anybody else on the platform. You're more than welcome. Madia, may I ask you to please flight the agenda? Colleagues in front of you, welcome and apologies. Can I ask Madia if there were any apologies, please?
Yes, good morning, Chairperson. Chair, we received 3 apologies from the Minister who's out of the country, as we indicated, and also from Deputy Minister Godlimpi, as well as the Director General, Chair.
Thank you very much. Colleagues, in front of you is the agenda. Could I ask for the adoption and the secondment of the agenda in front of us? I see Honourable Pinar's hand is up and Honourable van den Berg.
Good morning, Chair. I move the adoption of the minutes of the agenda. Apologies.
Thank you very much, Honourable Pinar. Honourable van den Berg.
Morning, Chair. I'll second.
Thank you very much. The discussions will only be on the briefing of by the ECIC, and then we will also discuss our oversight to the Eastern Cape next week. Colleagues, just give me a few minutes, please. I just want to indicate here. Okay. Today's presentation by the ECIC, we must remember that the ECIC sits at the heart of South Africa's export and industrialization agenda. And we must ensure that its work goes beyond the insurance and speaks to the real economic outcomes. What I would like to see coming from this is how its strategic objectives are actually driving export growth and creating jobs and supporting local industries in a measurable way. We had the legal opinion by the state law legal eagles last week on the Afreximbank. And in my view, it's an exciting development, but we must make sure that it is built on solid governance and fiscal discipline. And we must also then ensure that a well-intentioned idea does not again become a burden on the taxpayer. So therefore, in my opinion, the engagement should be about accountability and results, and ensuring that ECIC's plans align with the country's priorities. And furthermore, its performance reflects tangible benefits for South Africans on the ground. And in saying that, I would like to hand over to Ms. Ndlovu to take us through the presentation that was sent to us earlier. Thank you very much. Ms. Ndlovu, over to you.
Thank you, Chair. I'm here with the CEO and the CFO, and they will take us through a presentation, and I will conclude. However, before they start, I'd like to start and address the honourable members to say that, from the presentation, they will be able to glean that the ECIC stands as a financially sustainable developmental institution that exists to enable exports from every province and de-risks cross-border investments with a view to deepening industrialization, job creation, and inclusive growth across the country, in the same, in line with what the chair has already articulated. And you'll see that even without recapitalization from the fiscus, the ECIC continues to produce a positive return, exceeding its profit targets year to date, and then also maintaining approximately 9 billion in assets and contributing approximately 250 million to SARS each year, a sign of a corporation that is both financially sound and developmentally driven. So the mandate of understanding the developmental goals of the country is front and center for the ECIC. So without wasting too much time, let me hand over to the CEO, who is involved and with the operations of the ECIC, and the CFO, who is doing a brilliant job with our finances. Over to you, Mr. Mapula. Thank you, Chair.
Thank you, Chair, and thank you, Chair of the committee and honorable members and the leadership from the DTIC that's present. I will be taking you through the presentation on the back of what the Chair has alluded to. Obviously, ECIC does play a significant role in the economy. We are in the forefront of exports. We are de-risking cross-border transactions. So I'll just start by looking at the contextual environment. Where are we operating? What are the challenges? What are the opportunities that we have that we can harness? So when you look at the global environment, I think we all know that free trade is under attack from the tariffs that have been imposed by the United States. We also have geopolitical tensions. The war in Ukraine is still continuing, and more so the Middle East, the conflict between Israeli and the Palestinians. And hopefully the peace agreement that has been reached will be implemented, and hopefully we'll see de-escalation of tensions in that region. Obviously, the key debate around the world is climate change. We have seen some of the devastating effects of climate change, and there is renewed efforts to deal with climate risk in a big way. We've also seen how countries are trying to diversify their energy sources in order to move away from fossil fuels generated as energy to renewables in order to deal with the climate change risk. And then again, from our side, as South Africa, we've had, extended period of low growth that have been challenging us, as well as high unemployment rate that has also been challenging the country. And then again, when you look at the African continent, which is our biggest market, there have been some key challenges that we're dealing with. As ECIC previously, we settled huge claims in Ghana for the first time. We had a run on our book. And then the conflicts that we see in some of the countries, such as Sudan, where we have a project that we insured many years ago. And then we also saw some of the devastating wars in the DRC, especially in the East. We hope that the peace agreement that has been reached will bring long-term peace and stability in that region, because the country does present huge opportunities for South Africa. And again, in Mozambique, the Cabo Delgado region, where we've seen the insurgency causing a lot of problems there since 2020. Obviously, that violence has reduced, but there's still some sporadic attacks. But at the moment, the government has put some security measures, including some of the projects that we are looking at underwriting that had been delayed due to the insurgency attacks. And again here, we also see that the continent on its own, it does present a massive opportunity, not just in terms of the infrastructure or the minerals that are there, but also in terms of the services that can be offered by South African companies. If you look at the infrastructure deficit, which is estimated to be between 130 and 170 on infrastructure, it does affect the continent's global competitiveness. And it does shave almost 3%, from the continent's GDP. Obviously, on the flip side of it, presents massive opportunities. We have seen a lot of infrastructure projects coming online, and for example, the Lobido Corridor is one of them. We have also witnessed discoveries in terms of gas, Mozambique, Namibia, and we're also seeing most of the countries ramping up their border posts and as well as ports of entry in order to facilitate the transportation of goods or movement of goods and people as well. So some of these key opportunities, they exist in regions that are also beyond Africa. And this is in terms of diversifying our, our markets. We can see the BRICS, it has expanded its membership. There are so many countries that are joining. Some of these countries, they come from Latin America, as well as from the Middle East. Countries such as Saudi Arabia, Iran, they are also members, and some of the African countries such as Egypt have also joined the BRICS, which gives us a lot of opportunity to expand destinations of our exports. Then what are the opportunities in terms of product innovation? Obviously, from our side, we're seeing good opportunities to deepen our short-term insurance program. We see a lot of opportunities here for short-term trade transactions. Okay. Slides, can you move the slides? Sorry, Chair, our slides are not moving. We just need to, yeah, thanks. Okay. Yeah, so these are some of the opportunities that I was highlighting. And then again here, with the short-term insurance, we've got an opportunity to increase our annuity income. We also see opportunity in digitalization, transformation, obviously, embracing e-commerce, which also contribute to the ease of doing business and also improving our competitiveness, turnaround times. And then again, this also gives us an opportunity to deepen our brand visibility, over the continent as well as in the country itself. Now, what are some of the key challenges, from the business side of things that we see? There's a lot of renewed efforts, to deepen investment on the continent. Many ECAs are looking at Africa for opportunities, and we are competing with them. Some of the things that really hinder our competitiveness is the local content regime that we've got, which is set at 70%. And when you compare it with other countries, they've got lowest threshold of 20%. And they also pursue national interest projects, where in some cases they don't even insist on content. As long as the individuals that are involved are nationalities of the countries, they are able to support the trades 100%. But in our case, we cannot do this. So that is a debate that we're having, and we're willing to take forward to get to a local content regime that will really give us competitiveness, that will really give us an edge without sacrificing the need to promote SA exports of goods and services. And the key to this strategy, we are very much aligned with the DTRC's industrial policy, which is anchored on 3 Ds: decarbonization. Obviously, decarbonizing our portfolio will put us in a very good state. We are seeing some trickling of projects in the renewables that are going to give us, that angle of decarbonizing our portfolio. And then again, digitalization, as I've said, short-term insurance turns into the system. We have to digitalize our processes. We also have to support, digital projects all over the continent. And as I've said, given some of the global challenges, especially with the US, we need to diversify our markets. America is still our second largest trading partner, over 60 billion of exports going into the US on a yearly basis. And we definitely need to find a way of diversifying our portfolio over time. Obviously, the market still remains a big market. Our auto sector and our agri products, they still find home in the US. So diversifying over time, to other countries such as the Far East, you are Singapore, you are Thailand, and again, maintaining and increasing our exports into Europe, that would be a very good thing. And then again, maintaining and even deepening our exports largely on the continent. I think that should remain our apex priority. We need to leverage the AFCFTA We need to champion it. We need to make the objectives of the FTA a reality. Trading amongst African countries has been at its lowest, even with this agreement that has been in place for a number of years now. And there must be renewed efforts to increase our impact, make it realized. Next slide. So this table here, it does tell a very big story in terms of where the South African economy is going. We have seen a marginal growth of 0.8% at the end of the second quarter. And we can clearly see there some of the sectors that are rebounding. Obviously, we are not happy with the 0.8. We need to make sure that the growth of the economy is significant. We need to achieve a higher rate so that we can begin to address the unemployment situation that we have. For ECIC, what is very critical and of interest is the construction company. That has seen reduction over the last 10 years. We have seen some of the big construction companies that we used to partner with either being liquidated or being in business rescue. So that has had a huge impact because we are losing part of the big services, and the ability to aggregate. And the construction companies have been giving us that opportunity because when they go and bid and get projects or win them, they bring a whole host of subcontractors, especially from South Africa, to provide goods and services. So on that front, we are seeing a proliferation of international companies, and we now have to have a debate with them in terms of which of the South African value chains they're assessing, who are the subcontractors that they're contracting, and then we always have to firm up on those so that we make sure that they are exports. I never thought that there will be a day where we'll be dealing with a Chinese EPC contractor, which is registered here in South Africa, but it's happening. So it's for this reason that we do need to see a rebound in the construction company because it's quite a significant contributor to our activities. Next slide. So on this slide, I'll be focusing on the key targets and objectives that we have and how these have been aligned with the DTIC. And there are about 6 of them. So the first one relates to exports for global markets. And then again, here, if you look at the target that we've got a gross return premium of 400 million. This is not just the amount. There are projects that need to be underwritten to generate a premium of this level. Obviously, as we go on, I will indicate the projects that we're looking at. We do have a pipeline that we're turning around. Obviously, the key thing that needs to be realized is that most of our projects, they take a long time. We have to get involved in a deeper due diligence, negotiations of the documents, and that takes some time because these are large capital projects that involve a number of stakeholders. Then the second one relates to the BEE. In terms of the DTIC, it's about economy and the market concentration and economic inclusion, which is very key. That's transformation. And here we're targeting level 1, BBB score. And this we have to achieve on a yearly basis. Obviously, we've got a number of activities that contribute to that internally. Then again, reducing the red tape. In our case, we are targeting, automating our processes. And then again here, 20% of prioritized business processes have to be automated. And here the big one will be our insurance system, which we really need, especially for the short-term insurance business. And then again, the fourth one is about building a capable, ethical, and developmental state. And here we've got a number of targets, no breaches and risk appetite limits. There again, it talks to our business that we underwrite. We need to do it in a more economical way within our prudential limits, making sure that we are on the right projects that are very good, that promote exports of goods and services, and that talks to our mandate. And again, you also have a target of increasing our equity by 5%, which we are on course to achieve. And then we also have another target of on the other the 400 million target that I spoke about, and where we are now, you can see, we need to underwrite that portfolio in a more cost-effective manner. And here we are targeting the underwriting costs, our employee costs, that should not exceed 140 million. And again, there we're also looking at the employee engagement score of 70%. Obviously, we need a workforce that is engaged. We need employees that are happy, that can contribute, their bit to making ECIC a success. And then the culture entropy score of 20%. Again, here, this talks to the fact that we shouldn't be wasting more time on things that do not contribute to revenue, where we're dealing with conflict. So we need to manage our workforce, in a prudent manner. We need to make sure that they are happy, and we also allow engagements of critical issues, and deal with employee issues in a more effective manner. And the last on this one, achieving a clean audit is our apex priority. We have done it this year, and we'll still expect to continue to do it in the coming years. And then the last one, it's around unlocking access to capital finance outside of the state. Obviously, this talks to our activities, around the Afreximbank. I know the chair, you raised the fact that there might be costs that you will be incurring with that exercise. I want to assure you that the only cost that we incurred was when we acquired the shares in 2018, which was about $40 million, and the standby equity of about 13, which we have not contributed or been asked to contribute. So we still make money out of dividends out of this investment. But the ascension to the funding agreement by the government of RSA will go a long way into unlocking a lot of capital that can come from Afreximbank. Afreximbank is one of the largest trade financiers on the continent. If you look at their activities, they've been doing phenomenal work, especially in supporting trade financing. In the last year, in 2024, they spent about 18.7 billion, in supporting trade financing across the continent. They also have a very good balance sheet, about $43 billion, which is quite sizable. You can leverage on that. And then for us, we also have other projects initiatives that we're pursuing with them. For example, the SATIP2 program that we want to implement with them. And previously, we have benefited massively out of this. They are also giving us their guarantees, on some of the projects. For example, Mos LNG, we've got a guarantee of about $270 million. So which means we are the primary insurer. So they take 270 of that 800 million that we were underwriting for Mos LNG, and that reduces our exposure. So we are also using them as a risk mitigant. Next slide. So this colorful slide, Chair, it shows our financial robustness and sustainability. It begins to tell a story that probably we have not been telling it the way we should have been telling it. And thanks for the chair, for insisting that we need to start using infographics and tell a good story about ECIC that should be known out there. So if you look at our financial sustainability to date, I think it's at August, when you look at the revenue line, we're already sitting at 900 million compared to a budget of about 500. And then in terms of the profit before tax, you'll see there's a slight increase in the number there because it's about R1,048,000,000 rand. And the increase there is due to exchange gains. That has increased the number almost by 200. And the year has not ended, but where we are sitting, if we were to use that as a measure and substitute the gross return premium, we will be exceeding this. But this gives you a very clear indication of where we are. You know, we are a very strong company, and we are on course, you know, to achieve better, satisfying results. And then if you look at our operational, the cash in the bank for operational costs, you know, those small bars there, that indicates the balances there. This is the cash that we use for operation, the 38 and the 32, which is the balance. And then in terms of the gross premium, we just prorated it for the 6 months. We're still sitting at a very low base, 1.4 million, but we've got projects that will take us way beyond the 400. I will touch on those as I proceed with the presentation. Now, in terms of underwriting capacity, you know, the ECR and the SCR, they tell a very good story. So the economic cover ratio that we use here, this is an internal measure that we've adopted for prudency, and it's sitting at 366%, which means that we are heavily capitalized. So we need to be sweating our balance sheet a lot. So we need to be increasing our underwriting activities. Then when you look at the ACR cover, it's supposed the regulatory requirement is 100, but we're already sitting at 292%. And again, here it shows that we've got capacity to underwrite more projects. And then the one thing that I do not want to forget is the funds that we've got under management. These are funds that are being managed by fund managers, both our rand and the US dollar portfolio. That amounts to 9 billion. So even if we're to get a claim today from Ghana on one of the largest projects that we still have, you know, that project is sitting at around $220 million. So we can still settle it and still remain solid. And without needing any bailout from the DTIC or Treasury. So we run the business on a sustainable basis. We're not expecting to be running after Treasury and the DTIC for bailout. So that is the principle that we're operating this business on. Then when you look at the historical facts, you know, what has been the economic impact over the last 10 years, you can see that our contribution there, you know, the business that we've underwritten, the tax contributions that we've made to date. So, and the jobs that we've created, you know, about 41 million jobs that we've created to date. And then where are we year to date? You know, we have projects that are already in the drawdown phase. About 49.9 million has been drawn down. And that has translated into some of the exports and jobs created. So you can see there, even though we still have a low number in terms of job created during the construction phase, we still expect this number to rise as we onboard other projects. There are 2-3 projects with massive values. I will touch on them as I proceed. That can really push these numbers very high. And then in terms of the manufactured exports, we are sitting at 43.3 million. Next slide, please. Then on these slides, I've been talking about the projects that will take us, you know, over the line, and also some of the key groundbreaking achievements that we've made to date, you know, in terms of our relationship. And these are relationships that will contribute heavily in terms of deepening our impact. These are partnerships that will also help us to manage our balance sheet. So I'll start with the groundbreaking, and then I'll go to the material transactions. So in July, we concluded a reinsurance agreement with the Japanese ECA. It's called NEXI. There is a full name just below the abbreviation. And this event was groundbreaking in many ways because this is the first time that the ECA of Japan has concluded such an agreement with an African ECA in supporting, projects on the continent. So that agreement was signed in Yokohama in July. There was a TICAT event that we also attended. I was part of the panel discussion, on looking at opportunities on the continent and how the Japanese entity can collaborate with African entities to promote the AFCFTA and to promote meaningful investments that begin to address the challenges that our people face, that begin to move the frontiers of poverty and improve the daily lives of our people. So that agreement is very important in many ways. It's strategic, and we herald it in high moral grounds. In dealing with the next, this is a big ECA that has got a huge balance sheet, and we can benefit from their credit rating as well. So the essence of it is that ECIC will ensure Japanese companies that are based in South Africa that are exporting, their goods and services all over the continent. We do have a couple of transactions that meet those requirements, and those are the transactions that we'll use to test the arrangement. So we'll be the primary insurer, and then we can offload that exposure to Nexi under the reinsurance arrangement that we have. Obviously, the big thing there, we'll just share the premium that we charge. But the benefit that we get as ECI is that we're able to manage the balance sheet. And this arrangement, it can be repeated with other ECIs, the likes of Shannon Shore, the likes of EDC Canada. We can do it with any of the ECAs, especially those ECAs where there are companies, from their respective countries that are operating from South Africa, manufacturing and exporting all over the place. So we can support those companies. Then in terms of the material transactions, I just want to highlight this straight to the committees because we are already at an advanced stage. Some of these we can take them as foregone, but yeah, we are still in the process of taking CPs on some of them. So the Mons LNG is about 800 million, but the size of the project is $20 billion. So the exposure that we're covering as ECIS is about 800. There are other entities that are working with USA Exim, and their ticket is almost $500 million, billion dollars. So it's $500 billion. So you can see they're putting up big amounts there to support their exports as well. So in our case here, we have sat down with the project company and we've agreed that $400 million of this 800 will be placed in South Africa. So these are procurements of goods and services that should happen from SA to benefit the South African, companies. So 400 million of that 800 million is goods that will be placed and procured from South Africa, including services. So we have agreed with them. We have gone and concluded an export understanding agreement, identifying some of the companies that are already employed and those that will still be employed to provide goods and services. And like there, as I've said, we are expecting a premium of, in dollar terms, about 148 million, but in rand terms, about 2.6 billion, which will end, or receive it during the drawdown phase, which is expected to be 4.5 years. And then we've got Quantum Angola. This is a project which involves a water treatment plant project. We've already, the client and the bank have already signed the loan agreement. We are finalizing the policies, at the same time ticking off the CPs. And here we're expecting a premium of about $18 million, which will translate into a premium of 317 million rand. And we still have an opportunity to ratchet this amount due to the fact that there is the project was divided into phase 1 and phase 2. So the total amount is about $308 million that will be supported by ECIC. The total value of the project is 450. So there's still about 112 million. We asked engaging with Standard Bank, that will be financing that piece. Obviously, because we've already done the documents, it will be easy for Standard Bank to come in. They will just accede to the existing document. So again, increasing our prospects of the premium, it could be more than 370 million. Then we also have the yellow equipment. This transaction involve, provision of yellow equipment to the GRC. I don't know if some of the members know the terrain of the GRC. The roads there are pathways that needs to be expanded. During rainy seasons, you can feel sorry for some of the trucks that navigate those tough terrains, in transporting goods. So we believe that this project will make a huge, huge difference in the lives of the people of the GRC, even though it's not going to address all the problem, but it's a right step in the right direction. And we do see an opportunity to deepen the supply of the yellow equipment in this country because the country is vast, it's huge, and the needs are too much. So we will be focusing on this. And this is our first start, with the yellow equipment. And then we'll see as time goes on. We have already done the documentation. The transaction is done and dusted. We're just ticking off the CPs. And one of them, we wanted to make sure that there are goods and services from South Africa. We've been engaging with Isuzu that are going to supply some of the equipment. And most of it will have to be converted from right-hand side to left-hand side. We have seen some of the prototypes. We are hoping that these transactions will be closed very soon. Before the end of this month, we should be signing off. There's nothing preventing us from signing off the yellow equipment. Next slide. So on this slide, even though we're showing massive gross written premiums, we do not earn the premium, the same year we receive it. The premium is earned in line with the runoff period of the policy. So on this slide, we're just showing you how that premium will be earned over time. We're expecting to get about $5 billion net of insurance. And then the premium will be earned accordingly, for the next 5 years. That's what we're depicting there. Most importantly, we've also applied probabilities for projects that are in the pipeline. This means projects that have not been approved. These are projects that we're still assessing. We're still making sure that they're bankable. We apply for probability of 40%. And those that have been approved, like the project that I've highlighted, Mars LNG, Quantum, as well as the yellow equipment, they will apply the probability of 60%. But we bank this project at 100%. So which means we're very conservative in our planning, to make sure that we're not heavily optimistic. And also to counter for some of the delays. But we do have faith that all these projects that we've highlighted will be realized. Next slide, please. So on this slide, we are showing you our forecast of the business. We've got 3 cases: the optimistic case, as well as the base case, and the no pipeline. So assuming that we do not underwrite any transaction, just looking at our existing portfolio and how it runs off. So that no pipeline, the yellow line that you see that runs at the bottom, it indicates how our portfolio will reduce over time if we do not bring in new business. Then if we were to bring in new business at 40%, this is the short line that you see, which is the red, which ends up with 1.47. And these figures are in dollars for the sake of clarity. We can build our premium up, our portfolio up to $1.47 billion, at 40%. But we know that when we follow the optimistic case, which is more our realistic case because we bank some of these projects at 100%, our portfolio is likely to ratchet to about $3.13 billion. So that would be in the region of 30 to 33 billion inside, and which is where historically we have tracked. But we are hoping that we can realize it very soon because some of the large ticket transactions will be closing. For example, the Mos LNG at 800, so we'll be building up to that. The yellow equipment, if we close it at $308 million, that would be a good thing for us. So that will ratchet the portfolio size. And again, the water treatment plant that I spoke about in Angola, is part of the mix. So we do have a very good pipeline that will take us to achieve the revenue lines that were projected. And also supporting South African exports, goods and services. So, Chair, I will step off now temporarily to allow our CFO to take us through the slide that indicates our financial performance.
Thank you, ACO, and good morning to the honorable members. So as the CEO had mentioned earlier on, we had generated a profit before tax of 1 billion rand for the quarter. And in this slide, I'm just going into detail as to what makes that. So the 1 billion, it's largely driven by our investments, which generated profits of 600 million. And then that was followed by foreign exchange gains of 200 million. And thirdly, it was our IMU income of 167 million. And then with our underwriting business generating 49 million rand. And when you compare that against the budget, it is an overperformance where of 396 million rand, where in terms of our budget, we had estimated that we will generate profits of 396 million rand. And in terms of the slide on the top left, that is where we indicate the outperformance relating to our investment income, where in terms of our investment income, we had assumed that we will generate returns of 256 million. However, we exceeded that by more than 2 times, where we generated returns of 627 million rand. And those were largely due to our investments in the global equities and local equities. So if you recall earlier on, the ACO indicated that in terms of our written premiums, we had generated 1.4 million rand against the target that was set at 200 million rand. And he also indicated that as we receive those premiums, those are earned over the period. So what the top slide on the left is indicating there, it is actually the income that we have generated in the current period, where it shows that in terms of the budget that was set, we were estimating that we will generate income to the value of 126 million. However, that we have slightly missed that, where in terms of our actuals, we are generating 106 million rand. And that was largely due to some of the projects like your Mos LNG and the yellow equipment, which had already been approved. And we had assumed that by this time, those would have been effective. But all in all, Chair, the message that I would like the committee to take away from this slide is that ECIC is financially sustainable, and we have outperformed the budget that was set for the first 5 months of the financial year. Thank you.
Thank you, Chair. I'll step back and proceed with the presentation. Just focusing on our BEE objectives and what we have set ourselves to achieve there. And much of this work also benefits the provinces. So when I look at our socio-economic development, for this year, our budget, total budget is sitting at 6.7 million, which is 1% of the net profit after tax over the previous financial years. Then we've got two programs under this element, which is the ASISA Foundation for the Consumer Financial Education Initiatives, which has a budget of about 2.6 million, of which 40% of that budget is required for the consumer financial education initiatives as per the financial sector codes. So here we've got the land-based program that we're rolling out, and this is meant to enhance the financial and entrepreneurial capabilities of young Black micro business owners. And this initiative will be implemented across the provinces that have been highlighted here. And some of the offering will be, virtual trainings and interactive webinars, online coaching. Those are some of the activities that will be implemented. We do have a partner, a service provider that assists us with the implementation of the program. And then again, under financial literacy, we are targeting Gauteng, Northwest, Eastern Cape, and Western Cape, and especially areas around Atlantis and Harmonious and the Garden Route. And again, the financial literacy training is very helpful in understanding, how financial, in deepening knowledge on financial management, the literacy, how people should spend their money, how to invest. So that is the focus of this training. And again, there you can see the target market that we're looking at. Next slide. On this slide, under our ESD, which is the supplier and enterprise development elements of the BE scorecard, here we've got a huge budget for this year, and we should expect to do more. Our budget is sitting at 20.1 million, which is 3% of the net profit after tax for the previous financial year. And again, here, the two elements that we support, supply development, the budget is sitting at 13.4 million. And for enterprise development, it's 6.7 million. And again, over the years, because of the percentage, our percentage that is in the supply development, we've been, wishing that the percentage can be swapped so that we can do more for enterprise development, and where we can spend more money on bringing in new exporters, to participate in export trade. Nevertheless, you can see the budgets that have been allocated there. Then some of the beneficiaries under these programs, you can look at beneficiary one, like Dina Pretty-Well Limited. The money that we've spent now, 367,000, for working capital to purchase raw materials and stock. And this is 100% female-owned business, that resides in Gauteng. Currently, it employs about non-permanent employees, and we expect the number of permanent employment to increase to 5, with the support that we're giving. And then the next beneficiary, which is Pantone Creations. Again, this beneficiary resides in Gauteng. We are providing about 733 million rand, 33,000 rand. And this is for the delivery vehicle, including machinery and software support. And then we also, this business is also 100% owned by females. It currently employs 2 employees, And we expect that to increase to about another 2 to 4 with the grant funding that we're providing. And then we also have Eclipse Station CC. We are supporting them with about 425,000 for a delivery vehicle and computer equipment, 100% owned, based in Gauteng, and currently employs 11. We expect that number to increase to 13 with the grant funding. And then the last beneficiary is in Zimbi Trading. We're giving this company about 357,000, 51% black owned, small business enterprise, also based in Gauteng, and it currently employs about 30 employees, which we expect to increase to 33 due to the grant funding. And here again, I wish to highlight to the members that it might look awkward because most of the beneficiaries are in Gauteng. We're in the early stages of implementing the program. Obviously, we always have a 6 months lagging. So if we're to look at the amounts that is being provided versus the budget, there's still a lot of scope, to spread, to support companies that are in other provinces. We've also partnered with NEF and TISIS that are helping us. So that message is very clear that we should not only be concentrated in Gauteng, we should be spreading our list of beneficiaries to include other provinces. So just bear with us. We're still in the early stages of the program. Next time we come back to the committee, I'm sure this picture would have changed completely. Next slide. So on this objective, we are targeting 20% of our business process to be automated. We are on course to achieve this. There are some of the processes that are already at an advanced stage. The fixed asset module that needs to just be finalized. I think we're almost at the tail end of it. We're doing the testing. Hopefully this will be done before we even go to the festive season. And we also have the data analytic and business intelligence. We are in the procurement phase. I'm just hoping that we can get a service provider before we close for Christmas, and then we can get the work done and hopefully completed by the end of the year or before end of March. Then we are also in the process of procuring the customer relation management system. This one is a quick win. It's off-the-shelf solution that we can get and implement very quickly. And hopefully we'll do this before the end of the year. We're busy with collecting our business requirements. We're almost finalizing that process and again to the procurement stage. The other process that we're targeting is actuarial modeling tool. This is very key because actuarial, they work on the actuarial numbers, the reserves, they allocate the different capitals. They also do estimation in terms of the claims and what will be the impact of those claims on our balance sheet and solvency. So the process of gathering the business requirements is almost finalized. So we are now moving into a stage where we're getting the RFP or RFQ issued out so that we can get the service provider to finalize this. Then the big one is the insurance management system. So this is going to take a bit of time due to the fact that we cannot get a system off the shelf. And most of the ECAs or export credit agencies that we've consulted worldwide, they have built the system in-house. They've got a service provider and built the system to suit their specific requirements. So the team has gone to Kuke, which is the Polish ECA, to see what they're doing. 3 weeks ago, they were in China for a training, and at the same time, there were engagement on the system that the Chinese have, which they're willing to open up to share close to it, and also to share the journey that they've traveled in building it. But what I can say is that all of these ECAs, they haven't reached full maturity stage, but they've got a basic system that does a whole lot of things, and it is, the way of doing business. It also enhances the turnaround times. In some cases, they've got processes, that can make, automated decisions. So when a client applies for a cover, they just load the information online. The assessment is done online. Within 20, 30 minutes, the client gets a response. So we've learned out of those exercises. So that is the system that we need, which will make a big difference, especially on our short-term insurance space. If we really want to expand that aggressively, because we do see that as a game changer for business, especially in supporting small and medium enterprises, Black industrialists. So that system is crucial. But we also do not want to build a white elephant. Hence, we've gone through the process that we did. Previously, we had gone on tender. We couldn't get any service product to support us. Some of the companies that are in the market, they are building systems, but they're also using the other entities as guinea pigs to perfect it. So in our case, we wanted the ECA that is done. So Cook has spent about 7 years, and they've gotten a basic system, which has been used by another ECA, and that ECA took about a year to do it. So hopefully in our case, it will be a matter of months or a year, to implement the system and get going. Next slide. And then again, here on building a capable ethical development state, as I've highlighted initially in the opening slides, ECIC is a very financially stable company, as we've highlighted. We are paying our taxes. We've got a very strong capital solvency. Our assets are approximately 10 billion. We are likely to generate, huge premiums, where we are likely to exceed the 400 million that's there, that we've got as target. And then again, in terms of managing our risk appetite, as we've indicated, there are no breaches. The EC ratio and the solvency ratio are very healthy. We are on course to achieve our developmental mandate. Next slide. This slide talks about our commitment to deal with the culture issues, our goals, initiatives, and the expected impact. This slide just summarizes where we are. Things like strengthening leadership, are key to us to achieving our organizational culture. And then again here, there are a number of initiatives, agree on leadership behavior, leadership assessment and implementation of the leadership development program to enhance management skills and also soft skills in dealing with people. Again here, the expected is that leaders that are capable to drive the desired culture. And obviously for this organization is very key. You need that. The second one is reducing inefficiencies within the corporation. Again, I've already highlighted the fact that we are reviewing some of the processes to make sure that we're agile, we work as a team, we implement, and get the desired results. And again, here, as you can see, our culture and score, it had dropped from 20 to 47, which indicates that we do have some slight issues that we need to address. And the purpose of these initiatives is to really do that. Again, building and maintaining an ethical culture. We've got an ethics training that has been conducted. We are going to do it again so that we deepen the understanding. We also make sure that our people understand ethics. And again, the ethics assessment and reporting, evaluating every time and seeing where we are. And zero tolerance stance, that is the impact that we want on unethical behavior and breaches. And again, here, we need to embed risk and governance culture, throughout the enterprise. The training that we've been going through on risk and the assessment that are done, through surveys, they're very helpful in that regard. And again, we want an improved risk maturity level. Next slide. So this slide talks about our efforts or initiatives with the Afreximbank. Obviously, there's two things that I need to highlight here. One, there is the conversion of our shares from Class B to Class A, which is dependent on the South African government acceding to the funding agreement of Afreximbank. That process is already underway in process. The cabinet has endorsed it. The Parliamentary Committee on Trade has also supported it. So this matter will be dealt with in Parliament. Once Parliament ratifies the decision to accede to Afreximbank funding agreement, obviously that gives us as ECIC an opportunity to transition from Class B to Class A shares. Class A shares are reserved for government and government entities. They are also linked to material decisions in the company, participating in the decision making on the strategic part of the bank's take, the appointment of the president, the board members that represent Class A shareholders. Those are some of the benefits. But in our case, we also have other, benefits that we're going to derive from this. There is a discussion around the support that Afreximbank can give at government level. So they've got a government program which is going to be composed of some programs within it. And one of them will be the SATIP2 program that I've highlighted. And here we're looking at about between 3 billion and 5 billion. It will depend on the appetite from Afreximbank. But even if you were to give us 3 billion, that is still a lot of money. It's $3 billion, that will be coming through. Obviously, there will be mechanics agreed on how the disbursement will happen. And again, it also opens up the doors for Afreximbank to support a lot of initiatives in the country, supporting infrastructure projects, lending to some of the entities, getting into arrangement with commercial banks where Afreximbank can provide credit lines without any restrictions. And just to highlight the financial impact that Afreximbank can bring to SA. If you look at Nigeria, Afreximbank has supported Nigeria with a whole lot of things. They've built a $50 billion oil and gas treatment plant, which is owned by Dangote. Afreximbank has also previously advanced 3.1 billion rand facility to boost the forex reserves of the Nigerian central bank. So you get these interventions that Afreximbank can make. But in our case, due to the fact that we've got developed markets, Afreximbank also use our commercial banks to raise funds, to finance programs of the bank. So there's huge benefits that will come with that. And I know it's a good opportunity for us, to also participate in continental, institutions such as Afreximbank, because they're making a huge difference on the continent. And for us as ECIC, as I've said, we are enjoying utilizing the guarantee program. Obviously, for the first time, we'll use it on Mos LNG. We've got a very good relationship with them. And there are transactions where we're seeking to offload some of our exposure to them. And we do share the pipeline on a regular basis with them, on projects on the continent, and some of the priority industries, rare earth minerals, renewables. So they've got a lot of programs. And we also like the fact that they've got a huge geographic footprint on the continent. And they understand the dynamics of trade financing on the continent, the nature of the clients. They've got systems, that they use to gather information, data on clients' credit profile. So we can also latch on that. It's some of the benefits that we can enjoy with working with them. And again, strengthening this partnership is key and a big contributor to realizing the objective of the AFCFTA. So the other element that we're looking at is the establishment of the South African Eximbank. So Afreximbank will be providing us with technical assistance, in looking at the structure of the bank, assisting us with, what is the ideal structure that we can adopt. So they are going to assist us with that. They will look at the draft business case that we've done. They're going to assist us with the financial modeling. They have assisted other countries to set up their Exim banks and ECICs. For example, Egypt is one of the beneficiaries. Ghana and Nigeria, they've got Exim banks that have been assisted, that have been established with assistance of Afreximbank. Even as far as the Caribbeans, Afreximbank has been very active there, and they have assisted the Caribbean to also establish their own Exim bank. So in our case, that is another second initiative. Obviously, it does open the doors. If Afreximbank wants to be a shareholder, have those discussions. If they want to invest equity or extend debt in the newly established ECIC bank, those are the discussions that we'll be having, apart from assisting us to establish. Obviously, the key issue is to get the bank structure agreed, and then we make the recommendation to the minister, and then the process goes forward. And we will be leaning on them, give us technical assistance, because they have gone through those processes so many times. They've got experience and know how to assist us. And Chair, that brings me to the end of our presentation. Thank you very much.
Thank you very much. You have now brought some clarity and insights into your presentation, and I want to thank you for it. And it's great to see that an entity of DTIC is sustainable. Colleagues, I'm now going to open the floor for questions or comments. Please just indicate by show of hands whether you would like to pose any questions. I see Honourable Montwedi, Honourable Pinar, and Honourable Dlamini, followed by Honourable van den Berg. So can we start with Honourable Montwedi?
Thank you very much, Chair. A very good morning. Am I audible?
Yes, you are.
Okay, Chair, thank you very much. Let me welcome the presentation. I think it was a very well informative presentation. Thanks for that presentation, and also to hear of the good work that is being done by you guys. Now, there's an agreement that we must start looking into other export market. We currently do have a situation with the AGOA, where there's a challenge where about 3,000 South African products could actually find themselves not having any market to go into. Now, I'm raising this because there's a challenge with the African market that you spoke of, saying that there's a challenge in terms of the intra-Africa trade. But I think in the main, the challenges around the infrastructure in Africa, like you have your entities like your PPECB, your Perishable Product Export Board, that they would like to export certain products to African countries, but the issue of the infrastructure there being a problem. They will tell you that they can only export hard products, your apples, but the other products they are unable to actually export to some of those African countries. Now, I just want to check with you, are there any programs that you guys can go into as far as infrastructure?
Sorry, Honourable Member, if you could just switch off your video because your signal is very, very unstable.
My apologies. The video is off now. I'm saying Is there any other program that you guys can be engaged in terms of projects that you can look into the issue of infrastructure, into areas where there's some of our South African products can go to? Is there anything that you can look into that space with regards to that? And then the other thing is on the issue that you raised on the supplier development and enterprise development. I saw in the presentation there you are saying, I think it's about 3% of your net profit that you go and put in such a program. I want to know, one, what informed the 3%, because I think the need far surpasses that 3% that you have allocated towards that program. But I heard you saying that the program is at its early stages of implementation, so that we don't find its footprints only around Gauteng, to then say would welcome a situation when this project could actually find itself in all corners of the country. But if Gauteng alone can consume that 3% that you've set aside, it really says to you that you need to look into increasing that 3% of your net profit, so that whatever amount that you get to put there should be able to sufficiently be able to cover other parts of the country. Are you willing to increase the 3% to a certain percentage like that? And maybe if you can also share what are the qualifications criteria that you are looking into for such entities that would have interest in participating into your supplier and enterprise development project. Those are the two things. Thank you very much, Chair, for the opportunity.
Chairperson, can I go? Chairperson?
Yes, you may go, please.
Okay. Thank you, Chair. Chair, thank you very much. It's obviously very clear the CEO is very hands-on and he knows what's going on, and that's very encouraging. He speaks with passion and an understanding with this entity. Chairperson, I've got two questions. The first one just touches on the previous speaker's question as well, but more specifically, I would like to know, the CEO spoke about diversification and due to tariffs and European markets, and increasing our sector within the African countries specifically. However, it's widely known and it's been quoted by a few departments now that the infrastructure, like my colleague just mentioned now, especially the rail and the harbors, are in such a state that the trade options are there, but due to the dilapidated infrastructure, we are not able to. We can have all the trade agreements we want in the world, but the infrastructure is not there to carry the produce to the markets for African countries. What has been the department's engagement with specifically Department of International Relations and the Department of Transport to see how we can all be on the same page with regards to our trade and export markets to ensure these countries are on par with to make sure we can increase our import and export propositions. Secondly, Chairperson and CEO, I would like to know, you spoke about a lot of companies to an extent not willing to invest, and I'm just now reading between the lines, CEO. When you are engaging with these entities, whether they're local or international, what are the biggest red flags they bring up with you why they are not willing to invest, whether it's construction projects or infrastructure projects or whatever? Because as lawmakers and representatives of the public, we need to know how we can improve our investability, to get what I'm saying. So I want to get an indication from you, when you're engaging with these private entities, whether locally or internationally, what are they quoting as the biggest hurdles or concerns from their side? Thank you, Chairperson.
Thank you very much, Honourable Dlamini.
Good morning, Honorable Chair. Good morning, colleagues. Chair, let me also join the colleagues in welcoming the presentation. Indeed, the presentation, it is encouraging and give us a hope that we are going somewhere in terms of the presentation. Chair, mine was on slide 14, where it talks about the ECIC, I think Socioeconomic Development, and indicating the provinces. I can see that all provinces are indicated in both a first column and second column. Only Free State and Northern Cape are not appearing. I just want to check what could be the reason for the two provinces not to be part of those developments, because I believe that they are going to benefit the aforementioned provinces. So why all provinces are not included? And if they are still going to be included, when can we expect them to be included? Because those developments, indeed, they are necessary to all provinces. Thank you, Chair.
Thank you very much. Honorable Satole.
No, thank you very much, Chairperson. Good morning to your good self and everybody that is in the platform. Let me also follow you on welcoming the presentation that it was presented here. Now, I've got only a few questions here. My first one, I just want to know what is their method of marketing and communication? That is the first one. And in which platforms, locally and internationally? The second question, the investment company, is it subjected to transformation targets like your gender equality, skills transfer, youth and people living with disabilities, and the Black economic empowerment? Now, on slide 3, Chair, this question, Mr. Mapula is an acting Chief Executive Officer and a Chief Operating Officer. How come is he acting on both positions? And how long has he been acting both of them or each of them? And when are they going to advertise? Now, my last question, this one was directed to the board. How are you intending to implement the 2025-2026 executive plan with such high rate of top position being vacant, especially the one that the CFO and the COO? Thank you very much, Chairperson.
Thank you very much, Honorable Satole. Honorable van den Berg.
Thank you, Chair. Good morning, everyone. I have a couple of clarity-seeking questions. On slide 9 of your financial performance presentation, you show an expense vote called unallocated underwriting expenses. If you could please just explain to me what you mean with that. Then also, you show an overperformance of 27 million, but it looks like you paid less in refinancing your risk, meaning that your risk should have increased because you are now not writing your risk. If you could just explain to me, because it means that you might be putting the corporation at more risk if you do it like that. Please, if you can explain that. Then, does the corporation also include local projects, for instance, building or roads? I think Honorable Pinar has spoken to that. Now, I know that you are an export-import related company, but are you involved in any way with local projects? Because we in fact have situations where we've got mafias interfering with those infrastructure projects, and this would have an effect on your corporation, and therefore I need to know whether you have any involvement like that. Then on slide 9 of the corporate plan, you show 3 material transactions about to be closed. Now, I need to know, how deep is your pipeline? Meaning, how many of these transactions do you still have in the bag, or how deep is your business? The reason why I'm asking that is the influence that 3 transactions would have on a entity would be far more in terms of risk than what 30 transactions or companies would have, or 300. So if you can just give me an indication as to the depth of your profile. And then on that same slide, slide 9, you show a company with a G, a logo with a G. You call it Yellow Equipment, but I cannot see any company like that operating in where was the the only people with a logo like that is the Georgia Bulldogs team in America, and I'm sure that's not them. So if you can just give me some more information regarding that. Also, then I see Quantum Solutions in Angola. There's 2 companies named Quantum Solutions. Is it the one concerning with properties, a Swiss Angolan investment company, or is it the one with the Spanish firm with operations in Angola? Just for clarity, because we are speaking about large amounts of money. And speaking about that Quantum, you declare a possible income of 317 million, which is good. But what is the risk? I need to determine what is your full accounted should everything go wrong and this transaction comes down to a total non-existent to where the point where you must pay out the risk. What is the amount of coverage allocated to that in this transaction? I think that is it. I hope I was clear enough. Thank you.
Thank you very much. Honorable Mabilu.
No, thanks very much, Honorable Chair. Good morning, colleagues, and the CEO and the team. No, I'll be brief. It will be a brief comment and 1 or 2 questions. The first comment I want to make is also for me to acknowledge and appreciate the detailed, comprehensive presentation, especially now outlining the context, which is the global environment, the African environment, and also the huge potential that offers opportunities for us as a country. CEO, when your team, you see South Africa as a gateway to Africa, which is our broad vision as government. My question would be to say that in relation to SADC, are you having any footprint in terms of your core operations in countries like Botswana, Lesotho, Swaziland, that is SADC, and then East Africa, you have mentioned Nigeria, and so forth. I would just want to check your footprint in Africa, especially our surrounding Africa. Obviously, I mean, our neighbors, obviously one would be impressed by your performance, and I think it is a worthy, commendable development. 1, the financial sustainability. 2, you don't depend on bailouts on the DTIC, and also your profit margin of 1 billion and so forth. Is your over performance based on the fact that maybe you are a risk or you are over cautious in terms of setting out your targets? You are targeting below, but performing very much more than your expectation. Is that a strategy that you are using to do that? Obviously, one will also be appreciative of the figures that you have given in terms of the impact over the 10 years, in terms of job creation and the capacity to underwrite massive insurance short term and medium term. I will be interested in the risks areas like Sudan, the war-torn area, and so forth. What has been your experience in terms of your returns, in terms of your investment? Obviously, with regard to the natural gas that you have alluded to in terms of Mozambique and Namibia, I just want to check, are you already present in Namibia, or is it in the medium and long term? Because the gas deposits in Namibia have just recently been discovered. Okay, you have covered me with the low intensity war in Mozambique, especially in the Delgoa area. But with regard to Angola, you are only present in the yellow feed and DRC. I have had the opportunity, at least in my life, to go to both Kinshasa, DRC, and the Congo Brazzaville. I've really witnessed the bad roads there. So I think that is a wonderful development that you are there. But I just want to check the massive equipment that is being invested in. Is it also from South Africa in terms of its technology? Because we all know that the DRC is the richest country, not only in Africa, but in the world, with all massive natural resources and so forth. And then the last one will relate to the issue of the groundbreaking development, where you are saying in support of projects in Africa by your counterparts in Japan. The question would be to say, how have that development gave us a comparative advantage in terms of our own core mandate and our developmental projects as seen. I think with regard to the youth and the people with disabilities, have already been covered by my colleagues. So I would also want to know, lastly, in relation to risk again, in countries that are affected by natural disasters like floods and like floods and climate change. What is your appetite and what is your attitude around that? And lastly, are you looking forward to also making inroads in rich countries like your Middle East, like your Qatar, your Bahrain, all the East that is rich? Thank you, Honorable Chair, but we need to commend the team for a job well done. Thank you.
Thank you very much. I see the hand of Honorable Motwedi. Do you have a follow-up, or is that okay?
No, my apologies. My apologies is a legacy.
Okay, thank you very much. To the team of ECIC, these are the questions that I would like to ask. I see that you report underwriting of 400 million in gross written premiums. How many of these transactions actually translated into export contracts, and how is their developmental impact measured in jobs and localization? Now, you also report a 20% automation rate. Which specific processes were automated, and what is your turnaround time savings that were achieved? And then what is your next phase target? Now, you also, many people spoke about this, many of the members, whether you can confirm the zero risk appetite breaches in 25-26, and how are audit findings being addressed to ensure no repeat findings in the next financial cycle? And then the status of the tax exempt application with National Treasury. How much additional capital retention would this unlock for developmental lending? And then with regard to the Afreximbank timeline, you've given us an ambitious 2028 operational target. And in view of that, what are the critical milestones for 2026 and 2027, and what contingency plans are in place should legislative or funding delays occur? And then with regard to stakeholder engagement, how are you integrating exporter feedback, particularly on the competitiveness of our local content rules, into your strategic revisions for 2026, 2027? Now, to take it a little bit further, CEO, for the committee's sake, I, as chair, would like to ask if you would be able to submit a quarterly dashboard for us showing actual versus planned performance per strategic objective. And then I would also like to recommend that the Afreximbank business case and draft bill be tabled to the committee for pre-legislative scrutiny. And then with future presentations, could you align them with measurable outcomes, fiscal implications, and also risk management updates? And then would it be possible if we could look at a joint oversight session with National Treasury on the Afreximbank's capitalization strategy? And then the last one is a very difficult one, but I would like to encourage annual performance hearings where ECIC must demonstrate developmental impact with regards to jobs, export values, and SMME participation. If that is at all possible, those are the questions from me, and over to the CEO and CFO for responses to the questions tabled by the committee members. Thank you.
Thank you, Chair. We will go through the list. Obviously, where we need to revert with more information will indicate as such. Nevertheless, let me start by responding to the first question around, whether are we supporting any infrastructure projects? What is our strategy in terms of, looking at those projects that impacts our ability to do business, especially on the continent. And I think there was a question around what has been the engagement among the DTRC, DECO, and Transport Department, to look at those projects that really assist us in moving goods, across the different markets. So I'll give you some of the examples that ECIC has supported. We supported the Maputo Port project, which sits in the Matola area. So when the Mozal smelter was built way back, I think around 2000, it started around 1998, just after Mozambican warring parties, concluded a peace deal, Renamo and Frelimo. So that was the anchor project that was there. And then it was followed by the development of the port, which is now being used by most of the exporters, especially in the northern part of SA, Mpumalanga area. And there is a South African company that is teamed up with DP World. DP World is a Qatari company that invests in logistics and ports. So it has teamed up with the Green Road. They're managing that port. So they did consult us not long ago, I think late last year, when they were looking at expanding. So obviously there was a lot of work that needed to be done around the ESG. And then they decided to change the structure into a corporate loan so that they can fast track the development of the port. So that was on the back of the initial work that was done, that was supported by ECIC together with Standard Bank. Then another project that we did, which really facilitated exports of goods, into Zimbabwe and other landlocked countries, is the Beit Bridge border post expansion. that we supported. That project was done, I think, around 2021. And the border post has improved a lot of efficiency as well as customer experience. You know, during festive season, the border post used to be clogged with trucks, taking almost a week or two to clear the border, both into Zimbabwe and also from Zimbabwe, out of Zimbabwe to SA. The only issue is that the border post section that has been improved is on the side of Zimbabwe. That's where you get the efficiency. But when you come to the South African side, there hasn't been anything done there. And I think that's something that probably the Department of Transport needs to look at. I know at the time when we engaged with the sponsor that was supporting the project or managing it, there were engagements, involving the Minister of Transport, SA, to look at improving the SA side so that we've got a seamless experience across the border post, both on the side of SA and on the side of Zimbabwe. So it's a clear example of what can be done. And, very interestingly, that project, the way it was financed, we ring-fence the revenue, the toll fees that are paid by different types of vehicles. And that revenue is kept offshore and is dedicated to servicing the debt. And to date, I can report that it has gone very well. Notwithstanding the fact that Zimbabwe has got challenges of hard currencies, but that project is able to generate, hard currency, rands and dollars in terms of the transit fees that are paid. And they are looking at an expansion project, which will support. And on the back of that, we also developed our own underwriting criteria for border posts. There are 3 additional border posts that we are considering, to unlock, the movement of goods and services across the board. And I think for us, this is where it matters most, because the more we open the doors for South African projects, goods and services, is the more we can grow our economy. We need efficiency. We need the border post to operate well. I think one of the members raised the fact that you do get perishable goods, that needs to be transported very quickly. And, if we've got the efficiency in the clearance, some of the secondary projects that can follow will be the storage facilities, across some of these facilities. Then the second question was,
if I'm chair, as chair of ECIC, just to add that, in terms of, I'm agreeing with the members that the increasing transport and logistical costs have penalized the competitiveness of the South African exports. And that's one of the reasons that was highlighted by the World Bank in terms of what are the reasons for South Africa's underperformance when it comes to exports. So I just wanted to say that the members are spot on in terms of, these logistical problems. And as the ACO has highlighted, we have tried from the ECIC side to participate, especially with the border post examples that is highlighted. One of the members asked, what intelligence are we gathering from, financiers? The ACO and I have been doing rounds with bankers and financiers just to solicit their views. And one of the issues that they highlight around infrastructure projects is the high local content requirement in terms of our legislation. And they highlighted that they would rather work with Chinese ECAs, for example, and other offshore ECAs whose local content requirement is very low, hovering around 20% compared to our 50% in South Africa and 20% in the host country where the infrastructure program will be implemented. So the local content issue also has to be resolved alongside the logistical issues. I just thought I should add that. Thank you. Thanks, ACO.
Thanks for that.
You can carry on,
CEO.
Yeah, yes. So the next question was around, what is the feedback that you're getting from companies that are looking to invest, either in South Africa or on the continent? What are the challenges that they're facing, that inhibit investments from taking place? Obviously, there are issues, and the main issue that gets cited is risk. But in our case, we think there's a difference between a perception and the reality. And you do get varied views from different, investors. It depends on what they're looking for, and it depends on how long they're prepared to invest and remain in a specific country. Obviously, when you invest in a country, you need to hedge your bets in terms of the risk that you're seeing. You need to partner with the right partner in terms of managing that. But some of the things that they highlight, it's around regulation, regulatory environment, the speed at which decisions are taken, they tend to be slow. I remember in one case when I was at the Benin Union, most of the ECAs were complaining about Angolan government being very closed, not communicating decisions in time to make investment decisions. And that has had huge impact in terms of some of the projects that could have been implemented very quickly. But because of those delays, yes, it did take some time. So those are some of the challenges that impact on investment. And obviously, in some cases, the risk that exists. I will be honest here, if you look at Mozambique, they need the gas. We also need the gas. But the fact that there were insurgencies, that has impacted a lot on multi-billion-dollar projects that could have been implemented. Nevertheless, you do find some of the sponsors like Eni, that own Coral, it's another offshore gas project. They have gone and invested, they are producing gas, they are exporting, notwithstanding the challenges. So we are seeing similar approaches from some of the investors. So they are adjusting their risk appetite. And obviously, because there's peace, the risk is not so much big, it's manageable. The insurgents have been contained, as they're prepared to make billion-dollar investments in Mozambique. So those are some of the temporary challenges that we get. But overall, one has to look and gauge, the temperature there and make an investment decision. But like I said, it's a question of understanding the environment, engaging with the people on the ground, and making sure that you understand the landscape. Obviously, as a region, there's always an exaggeration of risk. If one country, especially in the SADC, has challenges, that tend to be imputed to be across the region. But you do have other regions in other continents where there are challenges and investments are happening. So I guess it's a question of how the narrative is piloted or explained or managed. That could make a big difference. But like I said, being on the ground, engaging, it makes a big difference. Then the other question that was asked by member Dlamini, it was around our consumer education, CFE, why Free State and Eastern Province have been excluded. They will be added. As I've said, we are in the early stages of implementing our program. So obviously what we do here, we engage with the service provider that helps us to implement the program and look at the number of initiatives that they've got, what kind of geographic spread is going to cover or not cover. So they've given us some early indication, but I think on our side, we have realized that we need to cover provinces in a great deal, especially for consumer education, because that can be done through broadcast radio. You could have programs on TV, and that cover the whole country. And it also means that we can use some of the channels, radio stations, in these provinces to drive the message. So I think that would be done. Then there was a question around what kind of marketing strategies or channels are we using to market ECIC both domestically and internationally? So, domestically, I know there's been a concern. Most of the people that don't know ECIC, I've been with ECIC for the last 24 years. So even when I joined ECIC, in 2004, 20 years, 2004, I didn't know who ECIC was. It was the first time that I encountered ECIC and the fact that SA has got an export clearing agency. But since then, there's been a concerted effort to really market ECI, to make it known, domestically. And we do that through a lot of interventions. Our members travel throughout the country. They also attend some of the initiatives at the DTIC. And then we also use radios and TVs, At some point we're having billboards, at airports of entry, especially OR Tambo and Cape Town, where our visitors, come to contact with our adverts. So we've been doing that. And then recently, yes, the chair will tell you, yeah, we are doing a lot recently. We run around with our clients, all the banks, we're attending some of the major exports conferences, mining in Dava, in some of them I get involved, or some of the members as panelists, they get involved in discussions. And then we're doing everything we can to market ECIC. And I think you will see that increasing quite a lot in the coming years. And we also on LinkedIn, we always showcase our achievements on LinkedIn. We are also in Facebook, which we use quite extensively. We also have a website, that can be accessed by members of the public. And our click-through rates have been quite high, which shows that there is interest in understanding what ECIC does. But obviously, because our business is very intensive, the word of mouth and personal contact becomes the primary. So we're having a dedicated marketing team. We also have a business development team that goes out to meet clients on a regular basis. Obviously we want to cover the whole country, but I guess the fact that we've got only one office, in Centurion, it doesn't put us in a good state. Obviously, some of the things that we can consider going forward, especially in line with the establishment of the Afreximbank. If the bank has branches, ECIC can take along and also establish offices alongside the branches, to get more visibility. But we are reaching out quite a lot, and I'm very impressed with the work that we're doing. Obviously, it will take time, but we'll get there. On the international side, we do attend international conferences. We also accompany DTIC, on different missions, binational commissions, presidential visits, even ministerial visits. So they are also giving us a lot of profile and understanding. We engage with a whole lot of ECAs at the Benin Union. In fact, we are the only African ECA that is recognized within the Benin Union. So if you talk about the other ECAs, people don't know them. But when you say ECIC South Africa, yes, they easily identify with us because we've been there for quite some time. In fact, our former CEO, Mr. Mandisi, he was the deputy president of the Benin Union. So which was quite a remarkable achievement that really raised the profile of ECIC. But I guess we can do more, and we will do more, for ECI to be well known. Obviously, what we've realized is that we need to be known very well and spoken about in the streets by South Africans that can identify with our logo, that can identify with the services that we offer. So there are a number of initiatives that we'll be pursuing in this regard. Then there was a question around AGOA and the concern around the fact that we've got a lot of exports in the agribusiness, and there's a lot of perishable goods there. And I guess the member was alluding to the fact that, how are we supporting perishable products, especially also looking at the continent where there is, in fact, such challenges in terms of storage facilities. And I think the member was right. This has come as a big concern, especially from some of the exporters, that they need to export goods in a very good condition, so that when they arrive and consumed in the different destinations, they're still fresh, the individuals who are consuming them can enjoy them. So there are a number of initiatives here that we're looking at. We have been specifically, contacted about storage facilities in Ghana. And this is due to the fact that there's a hotel, Marriott Accra, that we supported. And the owner of that hotel, she's importing a whole lot of fruits and vegetables from South Africa. And she needs them to be very fresh so that the residents of the hotel can enjoy good meals, they can enjoy good breakfasts with fresh fruits, produce, and juices. So we have been looking at that project for storage facilities, and we do see this becoming more and more prevalent. In fact, I was in last month in Saudi Arabia, Riyadh. When we were there with the minister, we did a tour towards one of the big stores, that is supported by Lulu Group. Lulu Group is a service company that supports some of these big supermarkets with fresh produce from SA. Meat, you talk about meat, lots of products startup products that we saw on the shelves in Riyadh. And it was very interesting that they've got two big stores, the one that is in Riyadh and the one in Qatar, Doha. And almost all the meat that you see in those stores is coming from SA. So, which is giving us a very good picture in terms of, the consumables that are being exported, and the need to look at some of the facilities that the member was alluding to will be part of that. We have been in contact with the Lulu Group, and we will be seeing them very soon, in order to establish formal relationships, because we want to assist exporters in that business, especially exploring, the need to utilize our short-term insurance products to cover the risk that they can face on that. But yes, there's a need to build that infrastructure in the country. I will defer the 3%. Okay. There was a question on the 3% of net profit after tax that we spent on our SCD, on our ESD. Yeah, ESD. And whether can we increase it? This is legislated by law, so we cannot change it. But what has become very critical over the years, and the CFO knows about this, we have been discussing the possibility of, having a floor amount that we can support. And this is due to the fact that this total 4% net profit after tax, it varies. There are years, if we are not making profit, it will be a very small amount. Well, and in reality, we've had a budget of about 150,000 rand, for the entire program, which didn't make sense. So, and that's what triggered the discussion on what is our appetite stance on transformation on our own? What is the amount that we're willing to support, irrespective of what the net profit after tax would be? And then I think we're in a flow of 2 million rand. So which we still keep. If our profits are below 2, we'll spend 2. If it's above, for example, like now, our budget is in 20 million. It's 21 million for the ESD, which is quite a lot, in 1 year. So that is to cater for the downside scenarios. So the answer will go this 2 million buffer that we keep in case our profits dip below that. Then we can still spend more and make impact. Obviously, there is an opportunity to revisit that amount, depending on whether we can afford it or not. Then There was also a question on whether the investment companies are subjected to the BBBE. Yes, the fund managers that we have, they are subjected to BBBE. And most of them, they are ranking, they've got a level 1 BE rating. And we do revisit their stance on a quarterly basis. So they do give us reports in terms of where they are, what is their strategy, because you do find people coming in and going out, changes happening at ownership and shoulder level. So they keep us updated, and we also check those developments and making sure that they can maintain the level B1 that I have. And then in some cases, we've drilled down to look at issues around, composition, how many females do they have? Do they have training programs where they're absorbing, young professionals? So that is part of the assessment that we do, and we do engage on a regular basis. Then I will defer the question around the
ACO, if I may jump in here, just to add on the fund managers, that we, as part of our committee of the board, the Social and Ethics and Transformation Committee, we are very vigilant about looking at the fund managers. We've just recently had a meeting of the committee ahead of our board meeting on the 30th of October, where we're given a report back around per fund manager, what are their transformation statistics, regardless of the financial return that they put on the table for ECIC. As you saw, our investment income is almost 2/3 of our revenue, as the CFO highlighted. We disregard that when we look at, are they transformed as they should be? The offshore ones, we put under pressure as well, where they will resist, for example, the transformation agenda, and we will be very vigilant in insisting that they also need to show that they are transformed, and then also to ensure that if they are unable to do so, we give them a time frame within which to show that from a gender and demographic perspective, they show diversity. I thought I should add that as well, that the board is vigilant around that. Then if you don't mind, CEO, I can also jump into the question that was posed directly to the board when you're ready. Thanks.
Yeah, that's right. So just to add on what the chair said, with the foreign fund managers, they also have their own programs, the DEI, which is diversity, equity, and inclusion programs. And we are tracking on that. Where they're not complying, we are insisting that we need to see them, pivoting and putting in place measures to comply with those. And some of them, they're making good strides. You can see the composition in terms of the female representations. Obviously, there are many areas that they need to comply with. But yes, there are those engagements that are happening. So, Chair, I think you can address the question around the CEO, ACEO, and COO acting positions.
Thank you. Yeah. Thank you very much. If I may, Chair. I think a little bit of context here would be helpful, just to share with the members what the trauma that ECIC has been through. So there was Mr. Kutwane, who was CEO for a long time, who came in, put in processes, and ran a really good ship in terms of the ECIC. And he left around 2022. And at that time, the current ACO, who's presenting to you now, was the General Counsel. And what happened was this current COO, Mr. Mandisi, was gravely ill at the time with cancer. And when Mr. Kutwane left, after about 9 years, I am told when I came in 1st of July of this year that Mr. Mandisi then ascended to the CEO role. And at that time, it meant that the general counsel, who is Mr. Mapula, then had to assume the COO role. Regrettably and tragically, Mr. Mandisi then succumbed to the cancer and passed away, which meant that after a year, which meant that Mr. Mapula then had to assume, also in addition to the COO acting role, had to also act as a CEO. And I've inherited a situation in terms of which the previous board has tried about 3 times to go through the process of appointing a permanent CEO. So my first order of business when I took over as chair, the instruction from the minister was to start a CEO election process, which we've embarked on, which can withstand scrutiny. And we advertised for a CEO role externally and internally, and the applications were the closing date was the 3rd of October. We have, through our proper procurement processes, contracted with Heydrich and Struggles, which is a reputable firm, as a headhunter to help us with this whole process. So in terms of the timelines that they've given us, they will go through a thorough process of shortlisting people for us, and from a board perspective, we are constituting a nominations committee, which will be chaired by myself, and we are also going through soundings, hearing the voice of the internal stakeholders, which are the employees and the executive, to hear what type of CEO they want from a qualitative perspective. And in addition, so as a board, we will be hearing from the shortlisted individuals, interviewing them thoroughly and making them present a turnaround strategy for ECIC. So internal candidates are also considered. And then the idea is that we will whittle down the list to 3 candidates as a board and make a recommendation to the minister. And this is after psychometric tests are done on each one of those candidates. So that is the process that we have embarked on, and the timing is that we are hoping to catch the cabinet meeting of the 3rd of December. And so by the 15th of November, we should be making a recommendation to the minister. So that is where we are with that process, and we are hoping that cabinet will give us the approval of the candidate we need after this exhaustive and rigorous process. And then the individual should be starting hopefully in January of next year. Thank you very much. That's my response to that question. And I think the member said, how will you implement and execute on your 2025-2026 strategic plan? So our intention is, as a board, to support the individual and the candidate that prevails after this rigorous process to ensure that the 2025 plan is implemented properly. Thanks. The CEO.
Thank you, Chair. I will be taking the members through the comments that they have raised on the financials. So I will start with the one where a comment was raised that how in terms of overperformance, in that are we not setting our targets low, which then result in us outperforming the results. So if I may just indicate, the outperformance that we are reporting in the current financial year was mainly due to, firstly, the investment income, which generated 371 million outperformance. And then in terms of the investment income, what we do when we estimate those costs, we use medium to long-term rates, and those rates are informed by the discussions that we have with the fund managers and also by the asset and liability exercise that we undertake, and which the asset consultant is also part of that exercise. And I guess the managers, the members can ask, but if you also ask the fund managers their views, will they not be inclined to understate those? And the answer to that is that in terms of the fund managers, their performance is assessed against the benchmarks that have been set instead of the budget that we are reporting against. So there is no incentive in terms of the fund managers to understate the expected returns. So, and the reason why we use medium to long-term rates, it's because on a month-to-month basis, the investments do fluctuate. So you would get periods where, because of the situation that is happening in the market, for example, right now, with the tariffs that President Trump had put across the world, where it will cause the investments to return negative amounts. But however, in some years or some periods, those will generate higher returns. So there are instances, or even when you look at, for example, the previous financial year, in those investments, we overall, as at March, we had underperformed the budget that has been set. And what we are doing now is, in terms of budgeting, it is consistent with what we have been doing in terms of the previous financial years. And then the other outperformance that we are reporting is with regards to the foreign exchange movements, where the outperformance as at August is 245 million rand. And then what we do when we budget for the foreign exchange movements, we usually go to Bloomberg, where we will check what the forecast is for the exchange rate movements. And then that rate is a composite rate where Bloomberg would have asked different institutions to estimate what the foreign exchange movements are. And the rate that we use, it is the rand against the US dollar. So what we have reported now, in terms of where the actual rate will land, ECIC does not really have a control over it, because in some years we do actually report foreign exchange losses. That's the first one. And with regards to the tax exemption, the question was, what impact do we foresee our equity increasing by as a result of getting this tax exemption? So in terms of the budget that we have set, and we do expect that between for the period between 2027 and 2031, ECIC is expected to pay a tax to the value of 947 million rand. And then in March, we had estimated 85. And in an event where we do get a tax exemption, then it means that is the amount that we will be saving. And the other question that was raised was with regards to the external audit findings. How do we ensure that we address those to avoid repeat findings? So what we do in terms of the external audit, we do distribute all the findings that have been raised by the external audit, because finance, it is we are the ones that will receive the report, and we do distribute that, and we ask the different units to indicate by when do they think they would have resolved those findings. And then on a quarterly basis, follow-ups are made with the different units to understand how far have they resolved those findings. And even internal audit does review those as well and report to the committees, which is specifically the audit committee, where they will also be providing an update in terms of how far we have addressed those. So in the past, we have resolved all the the findings which would have been raised by the auditors in the previous financial year, to make sure that we do not get those repeat findings. And the only year where we had repeat findings was with regards to the 2025 financial year, which is the year that we have just been audited. And the reason why there were those repeat findings is because the audit relating to the 2024 financial year only concluded in November, which meant that there were some findings which we were not able to have resolved by March 2025. And some of the findings we had also agreed with the auditors, specifically those relating to the technical reserves, which is our insurance reserves, that the time that was available for us to have cleared those, it was not sufficient. So meaning that we will be resolving those in the 2026 financial year. So we do not expect that there would be repeat findings in this coming audit. And the other question that was raised was with regards to the unallocated expenses. What do we mean by those? So if I may just give an indication in terms of our expenses, those are split in three. There are expenses relating to our investments and our SED program, and then there are expenses that relates to the underwriting business, which is the insurance business. And with regards to those for the insurance business, we split those further between the expenses that are allocated to specific projects. For example, if the traveling cost relating to a particular project, or the work that is being done by our underwriters. So for those expenses, we will allocate them to projects. However, there are other expenses like your rentals or the salary cost relating to the support units. So for those, we do not allocate to projects, but we note them as as expenses that have been unallocated. I will pause. Thank you.
Thanks, Chair. I'll take over from the CFO and deal with the balance of the questions. There was a question around.
Sorry, Mr. Mapulo, is that you on the platform?
Yes, that's me.
All right. Could I possibly ask that the remaining questions be provided to us in writing? As you know, we still have some internal matters that need to be discussed, and members still have to get to Parliament for this afternoon's debate, and it's already 12:15. So I'm going to give you 7 days to provide responses to the outstanding questions, please. But before we go off the platform, I would also like you to just give me feedback on something that cropped up, and that is the transfers from the Department of Trade, Industry and Competition. According to the MTEF estimates, you receive annual transfers averaging between 160 million and 181 million over the MTEF. And your presentation refers to a total revenue of 1.1 billion. Will you provide this committee with a breakdown distinguishing between the funds transferred from the department and then the internally generated revenue and investment income? And could you also provide us with how these transfers are utilized? Are they capital injections, subsidies, or are they tied to specific export guarantees? The reason why I'm asking this is because these transfers actually represent public funds, and we need to know which mechanisms are in place to ensure that they result in tangible export growth for South African firms rather than being absorbed in risk reserves or administrative overheads. So if we could ask you to look into that question and then all the other questions that have still not been answered. I'm very sorry about this, but Parliament, as you know, does not have enough venues at the present time due to the burning down of our NA building. And that's why we have to resort to online or virtual meetings. And I know the bus is going to leave around about 12:30 to transport members to Parliament. So acting CEO and CFO, if there are, and Ms. Ndlovu, please could you respond to us within 7 days on the questions that are still outstanding. Over to you, Ms. Ndlovu.
Thank you very much for the opportunity to present here today. We will certainly honor that and make sure that you get the written responses as soon as possible. And in fact, we will put everything we've said in answering all these questions that were posed to us in writing, if that will be helpful. And then also we've noted your request around the dashboard that should include, the actual versus the budget, the measurable outcomes, and the risk management. And so we believe that that will enhance our reporting. So thank you so much, and thank you for listening to us today. We appreciate the opportunity. Thank you, Chair.
Thank you very much. Sorry for cutting you short, but we are a little pressured for time, and we look forward to hearing from you with regard to those responses. And you are more than welcome to excuse yourself, or you may listen to our internal
we will excuse ourselves.
Okay. Thank you very much.
Thank you so much.
Bye. Colleagues, I'm going to ask Mardia to please come on board and take us through our oversight visit to the Eastern Cape. Time is of essence now, Mardia. You have less than 15 minutes. Thank you.
Okay. Thank you, Chairperson, and thank you, members. Just to provide members with an update in terms of where we are at the moment, we have received political approval for the oversight visit. At present, we're still busy with the funding application. I have indicated to members previously that we are we have transitioned to working with a new travel agent, and we're still figuring out a new working relationship with that travel agent. So the turnaround time, unfortunately, for things like quotations has been very slow, but we are trying to resolve that as quickly as possible. In terms of the program members, we have previously indicated in terms of the oversight visit to the Eastern Cape and Western Cape provinces that the delegation is departing on Sunday, the 19th of October. In terms of we have communicated directly with members, and we've got essentially two groups traveling, one traveling from Johannesburg and another group traveling from Cape Town. In terms of the group traveling from Cape Town, that will be the chairperson, Honorable Dlamini, Honorable Dlangisa Nadoda, Honorable Farmer, Honorable Vandenberg. And then in terms of the delegation traveling from Johannesburg, we've got Honorable Modisi, Honorable Situli, Honorable Pinar, Honorable Montwedi. And then we've also got two members, Honorable Mabila and Honorable Mukwena, who are joining us from Pietermaritzburg and Kimberley, respectively. Unfortunately, we were just informed by the travel agent that there are no flights available from those areas on Sunday the 19th, but I have liaised with both members, and both members have indicated their willingness to travel on Monday the 20th. Fortunately, in terms of the program on Monday the 20th, we've learned from previous oversight visits in the sense that we are starting with site visits instead of meetings. So when we start in the 9 o'clock in the morning, we'll actually be meeting with tenants and investors at the Kuga SEZ first, before we meet with all the other departments and all the other stakeholders. Thereafter, we will actually be meeting with the Kuga SEZ to receive an overview of their performance. That is from 9 till 12:30, and then there's a break. And then from 2 o'clock, we are meeting with the Eastern Cape Provincial Department of Economic Development and Tourism, the Eastern Cape Economic Development Agency, the DTIC, the Kuga SEZ, and the Nelson Mandela Metro. At this stage, I also just want to indicate to members that we've also written to the Eastern Cape Provincial Legislature to invite them to form part of the session. And so far, we've received apologies from the Eastern Cape Provincial letter. This is the apology letter that we received. Unfortunately, the Eastern Cape Provincial Legislature has got a pre-schedule taking Legislature to the People program, which is from the 20th to the 24th of October. Unfortunately, this also has implications for the availability of the MEC for the Eastern Cape Provincial Department of Economic Development, as well as the MEC for the Eastern Cape Provincial Department of Transport. But we have received confirmation of the delegation from the Eastern Cape Provincial Department of Economic Development, and that department will be represented. Just going back to the program quickly. That is on Monday, the 20th of October. On Tuesday, the 22nd of October, we will be going to the Marksman Industrial Park. We'll also be meeting there with the Eastern Cape Provincial Department of Tourism, Eastern Cape Provincial Department of Economic Development. In the afternoon of Tuesday, the 21st of October, in addition to all the other stakeholders we mentioned, we also will be meeting with the automotive industry. And in terms of the automotive industry, we've made contact with the Nelson Mandela Metro Business Chamber. And from their side, they will also be inviting stakeholders within the Eastern Cape automotive industry. These stakeholders include Isuzu, VW, Auto X, Stellantis, Borbet, Continental Tire, Axalta, Plascon, Bentletier, Shatterproof, Orion Engineered Carbon. So those are the stakeholders they've invited. They're still waiting for confirmation from those stakeholders. So that is our engagement with the automotive industry on Tuesday, the 21st of October. On Wednesday, the 22nd of October, the executive mayor of the Nelson Mandela Metro will be joining us Wednesday morning, the 22nd of October. And we'll be having our meeting at the Nelson Mandela Metro Council Chamber the morning to address issues of tourism safety around the Port Elizabeth beachfront and boardwalk. And then in the afternoon of Wednesday, the 22nd of October, we'll be doing a site visit to the South African Post Office, Regional Post Office in Port Elizabeth. On Thursday, the 23rd of October, we'll be going to a Department of Employment and Labour supported employee enterprise factory in Port Elizabeth. The afternoon, we've got a session at the Small Enterprise Development Finance Agency offices in Port Elizabeth. We'll also be doing one site visit. On Thursday, the 23rd of October, important for members to note is that we've received information that there's actually going to be a virtual plenary at 5 o'clock on the 23rd of October, and that we were advised that whatever our program involves, members need to be available for that session. So hopefully we were hoping to conclude the program in such a way whereby we're at least by the airport at 5 o'clock, because we have got a 18:55 flight from Port Elizabeth to Cape Town the Thursday evening. Thursday evening, members will be sleeping in their various parliamentary villages. And then on Friday, we had a management committee meeting yesterday. And considering the fact that members have to get connecting flights back to their constituencies, we thought it appropriate to end the program relatively early in order to enable members to get their connecting flights. So Friday morning, we've got a site visit to the supported employee enterprise factory in the City of Cape Town Metro. It's in Dabeni. And then the program concludes around about 12:30 on Friday, the 24th of October, with members flying back to their constituencies as they have indicated to us. And that's it from me, Chair. I just wanted to also add, as I indicated, at this stage, no bookings have been made because we're still busy with the funding application, but we're hoping at least by tomorrow, we'll be able to confirm with members exactly what the e-tickets and the flight numbers. But we are available if members have any further questions.
Thank you very much, Mardia. I just think the Friday oversight visit should finish a little earlier, because remember, there are members that, even though they fly to Joburg, they have to catch connecting flights to their respective provinces. So if we could try and stick to 11 so that we can leave by 11:30 to get to the airports, because many flights we should be able to land in Joburg by 3-4 to afford members flying to like Pietermaritzburg or Limpopo, or like myself in Mpumalanga, to catch their flights to those respective provinces. In saying that, is there any member that would like to ask a clarity-seeking question, or is everybody happy with the program that's been presented to them? I know they're running to catch the bus because I've just heard it passing by. Could I just see any hands if anybody would like a clarity-seeking question raised? Going once, going twice, going thrice, 3 times. Okay, Mardia, we do not have...
Sorry, Chair, there was also something I forgot to mention. We did receive an offer from one of the stakeholders who offered to take the committee on a tour, on a boat tour of the bay in Port Elizabeth, but it will be for members' own account. I think the boat can only accommodate about 20 people with a maximum weight per person of 120 kilos, but then it will be for members' own account, just for members to consider. If they are interested, then let us know so that we can see how many members can actually, how many members are interested, so enable them to at least cover, as they indicated, the cost of their fuel for the boat.
Okay, and just to elaborate on that, if I read correctly, the fuel costs is 2,000 Rand for a single trip around the bay. So if you are 20 on the boat, you can divide 20 into 2,000, then you'll get the price. And then, Mardia, I see Honorable Modise has put something in the chat. Can I please have the afternoon flight on Sunday from ORT to PE? All right, you'll...
Just if I can, in terms of the provisionally what we have at the moment for those members flying from Johannesburg, we are trying to get everybody on the 6:15 flight from OR Tambo to Port Elizabeth. That is on Sunday, the 19th of October. And then in terms of returning, we're trying to get everybody on the 15:20 flight from Cape Town to OR Tambo on the 24th of October.
Okay, just keep in mind that, as I said, people like myself and Honorable Mokoena traveling to the smaller provinces don't have connecting flights, so we cannot leave at 15:20 to Joburg. I have to leave by 2:10. That's the flight that's available for me to make it in time for a connecting flight to Nelspruit.
Understood, Chief.
All right. Thank you very much, members. If you have any pressing issues with regard to the oversight, please make contact with Mardia and she'll see how she can assist you. And then in saying that, thank you very much for a constructive meeting today. I think the ECIC is doing a great job. There are questions that still need to be provided, responses needed to be provided to us, but we'll get it in 7 days' time. And good luck to all those debating this afternoon. And in saying that, the meeting is adjourned. Thank you. Bye-bye.
Recording stopped.